Welcome to the deep dive. Today, September 10th, crypto feels like it's standing at a really critical crossroads.
It really does.
We're seeing undeniable institutional adoption, sure, but it's constantly navigating some, well, pretty significant macro crosswinds.
Exactly.
So our mission for you in this deep dive is to cut through all that noise. We're going to deliver the truly critical, high-level insights you need to understand today's market.
Without having to sift through a mountain of data yourself.
Precisely.
And we've got a really diverse stack of sources here. Articles, research, market data. Our goal is basically to distill the most impactful trends, events, maybe even some future predictions.
Yeah.
This way, you grasp the full picture clearly, concisely. You feel informed ahead of the curve, not, overwhelmed.
Okay, so let's start by mapping the current terrain then. What's the overall market sentiment right now? It really does feel like a fascinating mix out there, doesn't it?
It absolutely is. A real push-pull dynamic.
Yeah, on one hand, there's genuine excitement around institutional money pouring in, some groundbreaking tech advancements too.
Mm-hmm.
But then you've got this undercurrent of price volatility, regulatory uncertainty, and frankly, a very shaky global macroeconomy.
And the real insight here is how those macro factors like the U.S. Fed and European Central Bank interest rate policies, ongoing global tariffs, trade situations, how they're creating such pervasive uncertainty.
Right, that's the headwind.
Exactly.
Yeah.
But what's surprising, though, is that despite these headwinds, capital continues to flow into crypto. It's fueling relentless innovation, especially, in tokenized assets and AI integration.
That's interesting.
It's almost as if smart money is capitalizing on the dips, maybe seeing long-term value in the underlying tech.
That's a great point. It suggests a deeper conviction, doesn't it?
I think so.
And speaking of smart money, let's talk about the big, important news that's really moving the market. Institutional investment. MicroStrategy.
Yeah.
The software intelligence firm that's essentially become a Bitcoin treasury just made another massive move. They purchased 4,408 Bitcoin for a whopping $450 million.
Yeah.
This isn't just about doubling down, is it? What's the real implication here?
Well, look, this is huge. It's a strategic move that fundamentally shifts how corporate treasuries might view digital assets.
How so?
It almost forces a reevaluation of Bitcoin, as a core balance sheet component for the broader market. It's a loud signal of deep-seated belief in digital assets as a store of value.
And they're not the only ones.
No, not at all. MicroStrategy is not alone. We've also seen Bitmine Immersion, the crypto mining firm, acquire 1.86 million Ethereum.
Wow, 1.86 million ETH.
Yeah, and the Ether Machine, a well-known investment fund, investing $654 million into ETH. These aren't just one-off events. They reflect a growing, calculated confidence from major players. They're seeing long-term fundamental utility.
And it's not just direct asset purchases signaling this maturation, right? We're seeing traditional finance itself embracing crypto in new ways. Take Gemini, the crypto exchange. They're planning an IPO.
Right, I saw that.
With an eye-popping $2.22 billion valuation, aiming to raise $317 million. That's traditional capital markets saying, okay, we want a piece of this.
Exactly. That maturation narrative is critical for long-term confidence. However, we can't forget the crucial macro events looming just ahead that will undoubtedly influence this.
Like what?
Well, the European Central Bank's interest rate decision on September 11th, that's going to be immense.
Tomorrow.
Yep. It directly impacts global liquidity and overall risk appetite, sending ripples across all asset classes.
Okay.
And then there are former President Trump's tariff rulings. They introduce global trade policy uncertainty.
Right, more uncertainty.
And this isn't just about tariffs. It's about potential capital flow shifts across global markets, crypto included, as investors react to perceived economic stability or instability.
Okay, so from those big macro forces, let's pivot a bit. Let's talk about the relentless innovation happening at the ground level.
Yeah, there's a lot going on there too.
We're seeing Kraken expanding tokenized stock offerings on Ethereum. Pretty cool.
Very cool.
Avalanche has partnered with Toyota for autonomous robotaxi infrastructure. That pushes real-world utility in a big way.
A really tangible application.
And Kite AI is integrating stablecoin payments with AI agents, blending to, really cutting-edge technologies. What's genuinely surprising here? What's the real game changer in these developments?
I think what's truly game-changing is how quickly these seemingly different technologies like AI, tokenized assets, enterprise, blockchain, how they're converging.
Converging to do what?
To create entirely new, previously unimaginable business models. Kraken's move, for instance, isn't just tokenizing stocks. It's linking traditional equity markets directly to the Ethereum blockchain. That opens up new liquidity pathways.
Okay, I see.
The Avalanche-Toyota partnership?
Hmm.
That isn't just branding. It's a fundamental step toward decentralized autonomous infrastructure for real-world services.
Right.
But, and this is important, with this innovation comes the need for clarity. The EU market regulator has already warned about investor misunderstanding regarding tokenized stocks.
Okay, so a note of caution there.
Definitely. It underscores the urgent need for robust and clear legal frameworks. You need them to protect consumers and facilitate responsible growth. It's the flip side of rapid innovation, isn't it?
Yeah, absolutely. And speaking of caution and the need for protection, we can't ignore the specific pitfalls we're seeing. What are some of the standout risks, even the less talked about ones, that investors should be aware of today?
You're right to bring that up. While innovation excites, the WLFI tokens crash. Sadly, that's a textbook example of what happens when hype outstrips fundamentals.
So buyer beware.
Very much so. It's a harsh reminder that in crypto, if it sounds too good to be true, it almost certainly is. A lesson many learned the hard way in earlier cycles.
Unfortunately, yes.
And then we have the second Starknet Layer 2 outage within 2 months. This isn't just a minor glitch. It really questions the reliability of these nascent scaling solutions.
Yeah, that's not great for confidence.
No. How much trust can we place in them for critical infrastructure? These incidents just underscore the importance of thorough research, due diligence, and the inherent risks in evolving tech like Layer 2s.
Makes sense.
Interestingly, on another note, the collaboration between Trump Media and Crypto.com, building a $6.4 billion CRO treasury. That indicates that even public figure-linked tokens continue to capture significant market interest.
Okay. So, with all these signals, the institutional plays, the tech breakthroughs, the regulatory warnings, and the outright risks, what does this all mean for prices, say in the next day or two? Especially for key cryptos like Bitcoin and Ethereum, what's the immediate impact we should be watching?
Okay, for Bitcoin, that continuous large institutional investment from MicroStrategy and others,
The big buys.
plus the network's record hash rate in August, which, by the way, signals unprecedented network security and miner confidence, that's creating fundamental upward pressure. We've seen BTC reclaim the under $11,000 mark.
Okay, positive signs then.
Yes, but the caveat is that broader Wall Street enthusiasm isn't fully mirrored in crypto right now. Decreased BTC trading volume amid a generally bearish sentiment could limit immediate gains.
Right.
And that U.S. tariff uncertainty we mentioned, that could definitely inject some short-term volatility.
Okay. And what about Ethereum?
For Ethereum, the significant ETH investments from Bitmine Immersion and the Ether machine, those are incredibly positive signals.
That $654 million one especially.
Exactly. And when Kraken brings tokenized stock offerings onto the Ethereum mainnet, and a firm like Yunfeng Financial shows growing interest in Web3, it strengthens the entire ecosystem.
So what does that mean for ETH price?
Well, it could lead to slight price increases or at least stability for ETH in the short term, especially as we're tracking whales actively moving into Ethereum, which implies less immediate selling pressure.
Okay. What about altcoins then? Which categories might benefit or maybe suffer the most in this immediate complex environment? What's the sort of underlying narrative driving the winners and losers here?
Well, the narrative for beneficiaries seems pretty clear. DeFi and tokenized assets are primed, building on that Kraken news.
Right.
Think projects leveraging tokenized equities, or maybe even something like Smart Gold for tokenized gold and IRAs, or Kite AI integrating stablecoin payments.
Okay, real utility focus.
Exactly.
Mm.
Also, enterprise blockchain and high-performance layer 1s could see a boost. Avalanche, after its Toyota partnership.
Makes sense.
And tokens like Kronos, CRO, and OKB have shown recent growth, indicating a shift towards these utility-driven solutions.
And on the flip side, the detractors.
Likely includes high-risk new projects, like the WLFI sharp drop we discussed, where fraud issues expose weak fundamentals. That's almost inevitable.
Yeah.
Layer 2 solutions with reliability problems, like Starknet's repeated outages, could definitely shift investor interest to more robust alternatives. You need that reliability. And somewhat surprisingly, perhaps, Dogecoin, DOGE, might face negative sentiment. There's news about CleanCore's treasury setup coinciding with a 60% drop in CleanCore's stock. It's a reminder of how intertwined, sometimes strangely, these assets can be.
Huh. Interesting connection. Okay, that covers the immediate horizon pretty well. Let's broaden our scope considerably now. What about the longer-term trends? Looking out weeks to months, especially in technology and regulation, how is this landscape truly evolving?
Yeah, this really crystallizes how interconnected our financial world is becoming. Looking ahead, the regulatory landscape for both crypto and AI, it's shaping up to be quite fragmented globally.
Fragmented how?
Yeah. We're seeing a Western approach that often prioritizes protection and fitting things into existing frameworks. That's contrasted with places like Singapore that really emphasize innovation and creating new frameworks.
Ah, so different philosophies.
Exactly. This divergence could lead to certain regions becoming innovation hubs, while others become more restricted zones. Think about the EU's warnings on tokenized stocks we mentioned. This isn't just about rules. It's about where capital and talent will eventually flow.
Mm.
It has real long-term implications.
And what does that mean for the ongoing trend of tokenized assets and that convergence with AI?
Well, the trend of tokenized assets is only going to grow, I think. It's fundamentally changing how value moves.
How so?
The increase in services offering tokenized stocks, tokenized gold, plus the U.S. government actively trialing economic data on the blockchain. It points to a long-term integration. Blockchain weaving into traditional finance and data.
Which means,
It promises increased liquidity and utility for the underlying blockchain networks. That's a real potential game changer for financial markets.
okay. And the AI convergence.
The convergence of AI and blockchain, as seen with projects like Kite AI, will also remain a significant trend. It's opening up entirely new business models by enabling, say, autonomous agents to transact securely and efficiently.
Right.
And finally, that continuous large-scale institutional investment we discussed earlier, especially into Bitcoin and Ethereum, that will further solidify their positions as stores of value, as innovation platforms, signaling even deeper future adoption across the board.
That's a lot to consider. It paints a very dynamic picture, doesn't it?
Absolutely. Constantly evolving.
So for you, the listener, trying to navigate all this, what are the key indicators you should be monitoring to stay ahead of the curve, make informed decisions?
Okay, there are a few crucial metrics. First, keep an eye on BTC dominance.
Why that one?
Well, this percentage tells you whether capital is flowing back into Bitcoin, maybe as a safe haven, or if it's being allocated to altcoins for potentially higher risk reward.
So a risk-off indicator, sort of.
In a way, yes. If BTC dominance rises significantly, it often signals Bitcoin's short-term market consolidation. A drop can sometimes indicate an altcoin season.
Got it. What else?
Second, on-chain metrics. Platforms like CryptoQuant and Glassnode are great for this. They help you track things like whale activity, exchange flows, active addresses.
What are we seeing there now, for example?
Well, for example, today we're seeing a significant outflow of ETH from exchanges to self-custody wallets.
What meaning?
It suggests strong conviction from holders, less immediate selling pressure, maybe more long-term ODO-dealing sentiment brewing.
Yeah.
Conversely, inflows to exchanges usually signal selling pressure building up.
Okay. Useful intel. Anything else?
Yeah. Finally, keep an eye on gold price and the DXY, the US dollar index. Gold hitting a record above $3,500 an ounce today. That indicates a flight to safe haven assets in these uncertain times.
And the DXY.
The DXY reflects US dollar strength. It can impact crypto because a strong DXY often pressures risk assets like crypto, and rising gold prices might divert capital away from riskier ventures. They all connect.
It really sounds like a high-stakes chess match.
It kind of is.
Yeah. So, considering these signals, what are some possible scenarios for the market in the coming days and weeks? And maybe more importantly, what are the crucial risk management strategies for navigating this effectively?
Okay, scenarios. We can envision a few playing out. Scenario 1. Consolidation or maybe a slight increase. This would see BTC and ETH prices supported by that ongoing institutional investment we talked about.
And alts.
Altcoins with strong fundamentals,
Yeah.
DeFi, tokenized assets, AI integration, they'd likely show robust growth in that scenario.
Okay. Scenario 2.
Scenario 2, increased volatility. The ECB interest rate decision tomorrow or unexpected news from the Fed that could cause sharp swings in traditional finance markets, dragging crypto along.
Right. The macro effect.
Exactly. And tariff uncertainty could also contribute significantly to this pressure.
And a third possibility.
Scenario 3, strong divergence. Here, BTC and ETH might remain relatively stable or see slight increases, while altcoins with weak fundamentals or, scam risks, like our WLFI example, continue to decline sharply, a real split in the market.
So how do we manage those risks without obviously offering specific buy or sell advice? What are the core principles you'd suggest?
Look, the core principles remain pretty unwavering, I think. Always diversify your portfolio. Avoid over-concentration, especially in those high-risk new tokens.
Sensible.
Monitor macro news diligently. FED and ECB announcements are genuine game changers that can shift the entire market narrative very quickly.
Stay informed.
Absolutely. Exercise extreme caution with new projects. Thorough research on teams, tech, utility, security audits, it's paramount. Avoid projects with unrealistic promises or pressure to act fast. Classic red flags.
Right.
Always consider using stop-loss orders. They help protect your capital from sudden, unexpected price swings. Keep updating your on-chain data analysis to understand whale activity and capital flows.
Get the latest picture.
Yes. And finally, just prepare for volatility.
Yeah.
Crypto is inherently volatile, and current macro factors only amplify this. So maintaining a calm, informed perspective is really key.
That's incredibly helpful advice. Now, you mentioned an extremely important event for tomorrow, September 11th. Can you tell us more about that and why you, our listeners, should be watching it with such close attention?
Absolutely. The single most crucial event you need to watch tomorrow is the European Central Bank, ECB, interest rate decision.
Why is it so critical globally?
Well, this isn't just a Eurozone affair. It's an extremely important global event because central banks wield immense power over currency rates, inflation, and ultimately investor risk appetite worldwide.
Yeah.
Their decisions ripple out.
Okay. And what's the expected impact we should be looking out for? What are the different scenarios there?
Right. So if the ECB decides to increase interest rates, that's considered a hawkish move. It signals a tightening of monetary policy, usually to combat inflation.
And the effect?
It would likely strengthen the euro, but reduce the appeal of risk assets like crypto. Capital could shift to safer or higher yield traditional assets.
Okay, so potentially negative for crypto. What's the alternative?
Conversely, if the ECB holds rates steady or gives a dovish signal indicating continued easy monetary policy, it could support risk assets like crypto, especially if global inflation remains a persistent concern.
So potentially positive or neutral?
Exactly. But what's also critical is the indirect impact. An unexpected ECB decision can cause strong volatility in forex markets, particularly the USD pair and European stock markets.
And that spills over.
It then trickles down, affecting global risk sentiment, which directly impacts BTC and ETH. My strong recommendation for you is to closely track the ECB's official statement and the actual rate announced.
What should you watch right after?
Observe how forex markets, particularly USD and European stock indices, react immediately. Those are often early indicators. It's generally wise to maybe avoid large trades right around the announcement itself due to that unpredictable volatility.
Let the dust settle.
Yeah, exactly. Then reassess your risk appetite once the dust settles and the direction becomes a bit clearer.
Wow. You've just navigated a pretty complex landscape with us today, connecting so many layers of information from individual institutional buys all the way to global economic forces.
Well, it's all connected, isn't it?
It really is. You've truly been our expert guide through this crypto crossroads. Thank you for joining us on this deep dive.
It's been a real pleasure. This discussion truly highlights just how fluid and interconnected our financial world is becoming.
Indeed it does. And this raises an important question for you to ponder as you go about your day. As traditional finance continues to flirt with blockchain and AI becomes an embedded layer across industries, how far away are we really from a truly unified global financial system where the lines between crypto and traditional are completely blurred?
And maybe more importantly, what unforeseen challenges or perhaps revolutionary opportunities might that actually bring?